If you're looking to buy or sell real estate in Orange County, then you want to pay attention to this video because things are starting to shift in a way that might actually benefit you regardless of whether you're a buyer or seller. Now, one of the biggest changes that we're seeing is inventory is actually increasing. We're up 11% from this same time back in 2023. Now, part of this increase is due to seasonality. It's that time of the year where we start to see more homes come on the market. But the other reason is because demand is actually falling off a little bit because we're seeing stubbornly high mortgage rates. Instead of mortgage rates pulling back to somewhere in the mid to low 6% range, which I thought we would see by this time, we've actually seen interest rates go the other way, with interest rates now sitting somewhere between 7.25% and 7.5% on a 30-year fixed. And one of the primary reasons that mortgage rates are staying high is because not only is employment staying stable, it also looks that inflation is a little bit more persistent than I thought it would be, which has actually caused the Fed to say that recent data shows a lack of further progress on inflation, specifically saying it's likely to take longer than expected, which in turn means mortgage rates are likely to stay higher for longer. And because of this, it's going to continue to put pressure on buyer demand, which means if sellers continue to bring their homes on the market, there's a really good chance that inventory is going to continue to grow. But with that, one of the biggest problems that I'm seeing right now in the market is while inventory is actually increasing, we have 8% less homes under that $1 million mark compared to the same time last year. And because of that, we actually have less sales happening under $1 million because buyers can't buy properties that aren't available. So you have less transactions actually happening under that $1 million mark. Now here's the thing, the median home price in Orange County is currently sitting at $1,110,000, which means when we're talking about that $1 million price point, that actually falls below the median and is considered somewhat of a starter home here in Orange County. So you have less inventory coming at the price range where you actually have the most buyer demand. And this in turn creates competition in that price point. Now, typically when talking about a first-time home buyer, these are buyers coming to the market with less money down, traditionally speaking. So a lot of these buyers are coming to the market with 3, 5, maybe even 10% down, and they're going into the most competitive price point out there, which means it's very, very difficult to get your offer accepted when a home does come below that $1 million threshold. And we're going to actually talk about the homes that are getting the most attention here in just a minute. Now, I want to take a pause here and ask a huge favor. If you find any value in my content at all, do me a favor and hit that thumbs up. Not only does it help me accomplish my goal of helping guide buyers and sellers through the real estate process, it also helps the YouTube algorithm push it out to more people like you, which not only gets more views, but also helps me educate more people. When you look at the overall inventory here in Orange County, 67% of the listings that are on the market at the moment are above $1.1 million. And of that 33% of homes that are priced under $1.1 million, only 179 of those properties are actually single-family detached homes, which ultimately means there's not a lot of property out there for buyers to choose from. So it becomes really, really competitive when you start getting into the lower price ranges, especially when you're looking for that single-family home. Now, I realize I'm talking lower price ranges and I'm talking $1 million, but when you look at the overall market here in Orange County, when you start talking about single family homes under 1 million, unfortunately, that becomes the lower end of the price range. But here's the thing, it's not all doom and gloom out there. There are actually some positive signs that I'm starting to see as a real estate agent when I'm looking at the market. And one of the first things that I'm starting to notice is there seems to be less activity out there in the market. I've held open houses the last couple of weekends, or my team has held open houses, and there's just less traffic through those open houses. Now, you still have the normal neighbors that are walking through, and there are people coming through the properties, but there's not the demand that we had when interest rates were at 6.5% or even 6%. So I can tell you that mortgage rates moving higher is starting to have an impact on the activity out there in the market. In addition to that, the homes that are beautifully staged, the homes that are turnkey, the homes that are open concept with the style of everything that you see on HGTV, those homes are still very, very competitive when they are priced correctly from the start. Now, what I mean is you have the option as a seller when you put your home on the market of how you want to price it. I would say fair market value is the price where there's some sort of balance in between sellers and buyers. It's a price that's fair to the seller, but it's also a price that is reasonable to the buyer. And quite frankly, I believe that's the best way to price a home. But you also have the option of overpricing a home. And there are still a lot of sellers out there that believe their home is worth more than it actually is. And what I'm seeing is those homes are sitting on the market longer. They're not getting the activity that they would 6-8 months ago. And then on the flip side, you have the ability to also price it under what you think it's worth to try to create competition and drive that price up. And while I don't believe that is the right strategy for most people to take on, those homes are still getting a lot of activity because buyers see the value in it. They can see the price, and most buyers know what homes in a certain neighborhood should be selling for. So when they see something under market value, it starts to get a lot of attention. But here's the thing. Don't believe just because you see that price that you're actually going to be able to get it at that price. Chances are it's going to have that competition and drive the price up, and that's exactly what the seller's trying to accomplish. So if I were a buyer out there in the market, I would be looking for the homes that need a little bit of work, the homes that have been sitting on the market a little bit longer, not the homes in a terrible location or looking at homes that go against your non-negotiables. You should never do that. You should still keep your non-negotiables close to your chest. Don't sacrifice on things like location, number of bedrooms, that sort of thing. Or maybe condition when it comes to cosmetic upgrades, what the landscaping looks like, how it appears from the exterior. These are all things that can be changed over time, and this is where you're going to find the most value in properties because there's typically just less people looking at them. Now with that, there's still a lot of flippers out there in the market. These are people that buy properties that need a lot of cosmetic work. They fix it up and they resell it. In fact, flippers make up 3.3% of the transactions right now happening in California. So there is a lot of competition out there for making ugly homes beautiful, which makes it very, very difficult when you see one of these come on the market that's really underpriced and needs a lot of work. And even if you have the cash and the ability to make it your own, chances are you're competing against a flipper or an investor in some way. So if you're somebody that's trying to buy one of these properties that needs a lot of work, the best way to do it is to pay more money than that investor would. Because understand, an investor has to do the same upgrades that you likely want to do, but they also have to leave room for a profit. But if you're going to live in the property and you're not trying to sell it, you don't really need to build that profit margin in. You just need to be able to buy it and upgrade it and not be in a position where you're underwater at the end of the day. And because of that, you can typically pay a little bit more money than an investor can when it comes to looking at these ugly homes, if you will. Now that's a conversation that we could go down a rabbit's hole in, which we're not going to do in this video, but there are opportunities out there, especially in this market, with homes that need some work. Now on the flip side, when I'm looking at sellers out there in the market, I know there's just less sellers out there willing to entertain putting their homes on the market right now just due to market conditions. They know there's a little bit less demand out there. Most sellers are also buyers, so they know that by putting their home on the market, they're also going to have to buy one. And most sellers, before they put their home on the market, start looking at inventory out there, starting to check to see if they can find something that meets their needs. Therefore, if they do, they'll likely put their home on the market. And what most sellers are seeing is there's not really a lot of inventory out there. Therefore, sellers are kind of staying put. They're not putting their homes on the market. And while this is affecting inventory in a negative way, the fact that mortgage rates are a little bit higher is allowing inventory to grow. Now, it's not growing in a crazy way, as we discussed earlier, but it is starting to grow. So if you're a seller out there and you're willing to price your home at fair market value, you've got a nice property in a nice neighborhood, this could be a really good time to take advantage of the market because there is still a lot of buyer demand out there, especially when you start looking at certain price points, which we're going to talk about here in just a minute. Now you might be watching this going, Jeb, why would I sell my home when there's less buyer demand out there in the market? Well, it's because there's still a lot of competition out there in the market on top of cash. The last couple of properties that I've sold, in fact, the last property that just closed, 4 out of the 5 offers that we received on that property were cash. And I just went into escrow on one of my listings right now, and of the 2 offers, one of them was cash. And not only was it cash, it was above the asking price. And this is one of those homes that we just talked about. It's in a great neighborhood. We priced it correctly from the start, and therefore these sellers are going to be able to reap the rewards of it. But on the flip side, if you're a seller that's got to buy something else, you need to weigh that decision before putting your home on the market. Most of the transactions that I'm seeing happening right now in the market are life event sort of situations. It's either people that have gotten married, they have kids, they need more space, Or maybe someone has passed away, the family has inherited the home, they no longer want it, or they can't keep it for one reason or another, they need to sell it. And on top of that, I'm seeing divorce situations where the court has ordered the sale of the home, so that is also a life event. On top of that, people are starting to age, some of the boomers starting to move into retirement homes and liquidating assets like real estate, which ultimately comes down to people that need to move for one reason or another. But the main thing you're not seeing is those sellers out there that don't have to do anything. They're just putting on their market, testing the market just to see what happens. Now, in a gangbuster market where there's a lot of competition and a ton of buyer demand, you see a lot of looky-loo type sellers out there that are willing to put their homes on the market and just see what happens. That's not the case right now. The sellers that are putting their homes on the market right now are typically sellers that actually need to do something. So when you start to see homes sit on the market for an extended period of time, they're not moving. These could be opportunities for you as a potential buyer because there's a high likelihood that the fact that their home is on the market, that they're in a position where they need to do something. Now, that doesn't mean that you can go in and submit some lowball offer and get it accepted. Now, you might be able to do it, but there's not a high likelihood unless that seller absolutely needs to sell that property in a very quick time frame. But more than likely, what you're able to do is get that property for less money than you would if it was priced correctly from the start. So as a buyer, start looking at the opportunities out there in the market. Start looking at things that you can do down the road to improve that property versus finding the perfect one the moment that you move in. Because not only are there a lack of those properties out there, there's also a lot of demand for those properties. So in many instances, you end up paying more than market value because of that competition. Now, the last thing I want to do here is look at the overall inventory in the market and look at where buyer demand is so that as a buyer and or a seller, you can see what competition actually looks like. So as you can see from this chart here, somewhere around 42% of the active inventory on the market is under $1 million. But 60% of the buyer demand is looking for homes in that price point, which makes it very, very competitive. And as prices start to increase, when you look from 1 million to 2 million, 32% of the inventory is in that price point with only 40% buyer demand. So there's still a little bit more buyer demand than there is inventory, but it really starts to get a lot more balanced once you get above 1.25. Now here's the thing, as mortgage rates stay higher than expected, I expect inventory to continue to grow for the foreseeable future. Demand is likely going to back off a little bit, but that doesn't mean you need to rush out there and buy a home unless you can find the perfect home and it's the right time in your life. I don't believe that home prices are going to be significantly higher in 4 or 5 months, but I also know how difficult it is to find the right property. So if you're a home buyer out there looking, just stay patient. Wait for the right property to present itself. Make sure you've done all of your due diligence. You've gotten your pre-approval, you've gotten your agent, you're ready to go so that when the right property does present itself, you're in a position to make an offer. But at the same time, rather than focus on the market and how crazy it is, focus on the things that you can actually control. Focus on getting your credit score in order. Focus on getting more down payment if you can do that. Focus on putting money in the bank and putting yourself in the best financial position so that when the right property does come on the market, not only can you take advantage of it, you don't have regrets later down the road. Now, if you are a buyer or seller here in Orange County and you're looking for an agent to represent you or you're interviewing agents, I would love the opportunity to sit down with you, understand your goals, and ultimately help guide you through the process. So with that, if you would like to get in touch with me, my contact information is listed in the description below.